Welcome all to the Node, your place for news, interviews, and education. I am Mike, aka Veteran Crypto, and tonight, well, actually, during this episode, we're going to be doing deep dives into both Sentient Labs, which looks interesting. It is a AI. It's an AI play, so we're going to dive deep into that on the second half of the show and take a good solid look at the tokenomics and value capture, which is something that we heavily focus on here on the channel. And also we are going to look at Just Lend DAO. So it is a DeFi protocol on Tron. So both of those, we're going to take a look at a deep dive a little bit later on in the show. But for right now, let's jump into this. If you want to take advantage, there's a lot of channels out there that charge for DeFi education or crypto education. We here at the Node are here specifically to educate. We're not here to influence. We're not here to shill. We're not here to FUD. We're not here to do any of that. We seriously just want to help you all learn about crypto and DeFi. And so, David has gone out of his way to build out a suite of products that we are literally giving away. And along with that is a DeFi University. So if you're beginner, intermediate, advanced, you can jump in and it's structured courses, professional courses with checks on learning, tests, quizzes, things like that, to educate you on wallets, advanced DeFi strategies, the basics of fiat and banking, all of that, comprehensive. Also, we have the Intel library, and so this is where we deposit all of the deep dives that we do on this channel and on the blockchain report. So there's 13 deep dives every single week that we put up on our website for free. And all you have to do is go in here and watch them. And they're complete with, like a quick, usually about an 8-minute video. There's a bunch of reading material that gives you the data and the facts and what's going on with the project. And then you have the basically PowerPoint presentation where it goes through and gives you all the different information in a different format. You have the elevator pitch, just the infographic that just kind of gives you the high points. And then the most important document is the source document. So if you scroll to the bottom of the source document, you hit these last 3 pages. And this is something that we do that pretty much nobody else out there does. We cite our sources. So everything that we state here is not our opinion. It is a statement of fact based off of these primary sources that we use to build out this information. Yes, we use AI. Yes, I fact check most of it. But you still need to do your own research. You have to put in your due diligence. But these will give you a huge jump start on if it's even a little bit interesting of a project. What is the use case? Who are their actual partners? Is it generating fees and revenue? Does the token have value capture? Just the basics. Because if the answer is no to all that, it's like, why even bother wasting your time doing a deep dive? So this is to get you started. So anyway, how's it going, David?
Great, Mike. Going great. I had the entire morning to work on the Node, man, and built out some really, really cool features. So we're going to be able to go live from StreamYard in the Node, in the source. So did you share the source? Because that's the place to be, man. So if you hop on into the source room, yeah, there you go. So right here, I'm gonna post something real quick in the general chat. I found this wallet on or this account on X where this guy is tracking the Cash Cat insiders, the wallets that held a lot of that supply. Turns out that those wallets that they've launched a lot of tokens, a lot of memes that have run to millions. So worth tracking the insiders. But this source room right here, man, this is going to get built out quickly. So, I mean, it already works. You've got general intel, learn, announcements. You can check all the other users. You can send DMs. You're going to be able to view our, our live streams. It's going to go from StreamYard into the source room. It's going to display right at the very top above the chat. And I mean, this is the place to be, man, because what you can do in here, which is so unique to the Node network, is you see in the bottom where it says write a message. As you write a message in there, and I think, yeah, you got your username saved. Now you can also upload a, just like a profile picture too. But you see down there in the, so when you write a message out, the thing that's super cool about all this
it's not
is
saved by username.
So those are two different things. Okay, good. I'll fix that. So yeah, your username is the @ symbol, but your profile name is, I think it's tied to either your email address or your Google account. So I need to fix that, but so that people can change it. But you see where it says Intel and lesson right next to where you can write a message. So the thing that's so cool about this is, as you're writing a message, let's say that you want to cite your source. Remember, the name of this thing is the source. So if you want to cite your source, all you have to do is, type out a message and then click on where it says Intel. And then you can search the Intel library right there from that chat box. You can select the piece of Intel that you want to use to, back up your claim, and you can attach that to your post. And you can do the same thing with the lessons from the DeFi University. So, whether you're in the Learn tab, the Intel tab, or the General tab, you can cite your sources, you can post lesson content, and pretty soon we're going to be able to go live from StreamYard in the source room. So, yeah, man, I'm excited about this. This is super cool.
Nice. All right. Well, let's jump into this. Let's see what I got for news today. Morgan. So it looks like they're saying the big macro story is Washington is officially eclipsing geopolitical noise. The market is ignoring Middle East headlines and hyper-focusing on the progress of the Clarity Act in Congress and upcoming CPI data. I mean, is that what you're seeing in the markets? Is oil kind of, the oil price ignoring what's going on? And
yeah, oil is completely ignoring what's going on. And so is the S&P. The S&P has been rallying. It used to be that when there were, news of strikes on Iran and, retaliatory attacks from Iran against its neighbors there in the Middle East, that you would see the S&P sell off a little bit. You would see crude oil rally. We're not seeing that any longer. In fact, we're seeing the opposite. So market psychology has shifted, and sentiment about that engagement in the Middle East has definitely shifted. And so I think what you were saying at the end of that, how attention is going to shift focus towards CPI. I think that that's valid because I'm watching rates. I'm watching rates closely, 4.5% on the 10-year. And then if you take a look at the 30-year, the 30-year is sitting at above 5%, 5.05%. Both the 10-year and the 30-year are very, very close to levels of resistance. And if they break out, well, stocks wouldn't like that very much. So I think that's probably the thing to watch is CPI. And also think about this. How does Bitcoin usually react to hot CPI prints? Not favorably. Bitcoin doesn't like hot inflation, or at least that's the way that it's traded over the last couple of years. So I think we're getting really, really close to a Bitcoin bottom. I'm very excited to be able to start buying Bitcoin here pretty soon. And, a handful of selected altcoins too, but it's just not quite there. And so I think now that this war has restarted, no one cares, markets don't care. Markets care now about CPI and they care about what's going on with chips. So, if these chip stocks, like I'm more, focused on watching CPI and maybe even like the Kospi, the South Korean index, because it seems to have rolled over. And well, it doesn't seem to have, it has rolled over. And that's basically like a levered chip index. That's the way that I think about it. So I'm more focused on watching SMH and the Kospi than I am, anything going on with crude oil or Iran. It seems like, market doesn't really care about Iran or crude very much anymore.
That's good. I'm telling you, I'm freaking sick of paying freaking $5, $6, $7 a gallon for gas. But so actually, something that I want to cover real quick before I forget is tonight we actually have a guest on Crypto and Chill. So Longview Compute is very, very knowledgeable about Canton Network and actually has built out an app on Canton Network. So kind of excited to talk to him tonight. Trying also to get C Demeanor on, who's a fellow veteran. Been trying to get him on for a while, but have been unsuccessful so far. But would love to have him on. He has some really, him and his team do some really good research. So would enjoy having him on as well. And the topic is going to be value capture. Now, and David, of course, feel free to jump on. But yeah, I mean, that's basically, we're just going to talk in depth about value capture and what it means for tokens, and maybe even, take a look and see how tokens with value capture, how they're performing, compared to tokens that don't, here in the bear market. And, I kind of think that we know what we're going to find. But anyway, just wanted to share that real quick. If you want to join us tonight, that's 5 p.m. Pacific, 8 p.m. Eastern. So
Canton's bouncing over the last couple of sessions here.
Yeah.
So, it got down as low as 12.5 cents. It's bounced up to 13.5 cents. So a nice little bounce out of CC, still trading below a level of resistance, but good bounce.
Well, and, we're supposed to see it, and we call it like we see it. The soft launch of the DTCC on Canton Network was supposed to happen on the 13th. I've been seeing a bunch of posts that it's almost like they ignored that, and they're saying it's the 15th now. So I'll dig into that today, and we'll see what's going on with that. But I'd never like to see, and like I said, we call it like we see it: good, bad, middle, whatever. I don't like seeing changes like that without some sort of explanation. Some sort. Because to me it seems sneaky. Where it's like, okay, yeah, we're going live on the 13th, and all of a sudden it's just like that was never said. We're going live on the 15th, and so I need to dig into it and see if that's the case. But even projects we're bullish on, we're going to point out, if we see things that are of concern. Like we always point out, Canton is still inflationary. It doesn't generate enough fees to burn, because it's burn mint mechanism. It doesn't generates a ton of fees. I mean, it's the largest, the largest revenue and fees producing crypto in all of crypto. It generates $2 to $3 million a day in fees, which 100% of it goes to buy back and burn the Canton token. And right now we're sitting at about 0.6. We're trying to get to that that solid 1 to get to that equilibrium, so it will flip deflationary.
I actually just posted about that in the source. As you were speaking just now, there's a piece of intel that came across my desk from X, and posted about it in the source in the general chat. Canton statistics as of today. So you can see, in this post from Akira over on X.
You want to show it?
Sure. Yeah. Let me go ahead and share my screen. Check this out. So here we go. This is the source. This is our custom social network at the node.pro. How cool is this, man? So Canton statistics as of today. Let's go ahead and click through. Let's take a look at this over on X. So Friday, that's today, the burn mint equilibrium watch for Canton.
All day.
Yeah, all day.
It's Friday, all day till tomorrow.
TGIF. So check this out, man. Mint, and we're always talking about Canton still is inflationary. So you can see that here, inflationary to the tune of 248 million CC. Okay, so this is
per month.
Yeah, so this is a 30-day snapshot. Yeah. But the fact that they're able to generate enough revenue to burn all of these tokens in the first place tells me that there is user adoption.
Well, they're burning 300, a little bit higher. They're burning 385 million. So, like I said, zero point 0.6. So about 60% of the newly minted tokens that they use to incentivize validators, super validators, things like that, is new, fresh tokens that are coming on the market. The fees that are generated burn, and right now it's roughly 60% of
Yep.
that supply is being burned per month.
Yep. Looks like about 61%.
Oh, there you go.
There you go, right up there. So BME, 61% or so, just a tad shy of 61%. And look, this is great improvement. There's no doubt about it. But still pretty far from 1.0,
I keep saying it. I'm interested to see next week. I'm interested to see if it goes live, if it goes live as planned, the DTCC soft launch. I will be interested to see one, the amount of fees that are being generated from the added transactions, and the impact it's going to have, and if it's going to send us to 0.7 or 0.8, or if it's going to send us past equilibrium. I'll be really interested to see the effect, kind of the network effect, or the token burn effect that it has on the Canton token.
Yeah, well, I mean, that's the question that this X account is, posing for all of us here. So how much of that activity actually translates into value for token holders? There you go. That's the
value capture, aka
exactly.
value capture.
And that's what we're always talking about.
Yeah.
So, I mean, look, total transactions over a 30-day period sitting at 62 million. Like, for what other chain can we compare this to? What other chain has had, millions upon millions of transactions over the last 30 days? We've got to maybe take a look over on DeFi Llama and, hop into chains. What do you think, Mike, is the best way to be able to compare this to another chain?
I would think that, I think on DeFi Llama that you can look at transactions, like daily transactions, monthly transactions, can't you?
I don't know. I don't think I've ever used it for that, but I'm sure that I can. Let me see if I can ask Google real quick. Can I use DeFi Llama to find monthly transaction count for particular chains? I think you must be able to. There's got to be somewhere in there.
Yeah, right here, like Solana. If you click on add metrics, then you can on some of them you can select transactions. So like Solana right now, it looks like daily. So it looks like on the 9th of July there was 97 million transactions.
Okay, so can you share your screen? I want to see that. I want to see where you found that.
Yeah, let's.
And I see what Crispy's saying in the chat. Thoughts on Morpho, Uni, Aave. We talk about value capture, user adoption, revenue growth. All three of those projects exhibit our trifecta. They all do. It's just how much value.
To varying degrees.
Right, exactly. It's just about how much value capture. That's really the thing.
So basically, I just went up to here, like Solana. I just went up to add metrics, and you can add any of these, perps volume, dex volumes, SOL incentive, SOL price, market cap, whatever. And so I added transactions, and so it looks like SOL transactions. I put it on daily, but SOL transactions since it looks like September of 2023 for the most part, is just trending up and to the right. That's a healthy ecosystem.
So how many average daily transactions? It looks like if I'm just taking a look at Ethereum, the mainnet, it looks like it peaked in the middle of April at roughly 2.1 million daily transactions for ETH mainnet. So if we, extrapolate that out over the course of a month, 30 days, then we're talking about maybe 60 million monthly transactions.
I'll just switch it to monthly.
Perfect. Look at that.
So 63.5 in the month of June. We got 63.5 million transactions for ETH.
Huh. So 60 some odd million.
So let's go back to what is it? Total transactions 61. So I mean, Canton is on par with Ethereum as far as monthly transactions.
Isn't that crazy?
And dude, that's just with Broadridge.
I know.
That's just with one customer. It's generating these daily fees of $2 to $3 million a day, and on par with Ethereum for monthly transactions just from the repo markets that Broadridge put on. So
and just from a small sliver of that transaction volume too.
Imagine, when the DTCC goes live and all these other we've shown the ecosystem chart, all these other projects that are actively building and about to go live on Canton. Not MOUs, not memorandums of understanding, not, there's rumors of they're talking with them, like actively building and going live on Canton.
Now, I'm comparing the transaction numbers here, to Solana. And I had no idea that that there are billions of transactions per month on Solana. I had no idea. Wow. So why is it that the token, the coin, Sol, why is it not capturing more of that value? There's got to be more value to capture there.
That's a really, really good question. Does it speak to the lack of value capture of the token?
I think it does. I think it speaks to the inflationary nature of SOL right now. But I did see that there are a couple of proposals in the works to fix the tokenomics, but by making it capture more value, the Solana coin, it seems as though it would make the validator set more concentrated. That was my understanding of the proposals. So, there are trade-offs, right? Pros and cons. I'm all for value capture. So, Solana, I noticed that also OUSD, when we were taking a look through the deep dive research on OUSD yesterday, that it's launching first on Solana. It's also launching on EVM chains, but it's launching first on Solana. So, hey, that's a big vote of confidence, I would say.
Absolutely. Well, and you can't underestimate, the power of meme coins, and Solana is the meme coin chain. Pump.fun. We did a deep dive on yesterday. That is, it has decent value capture, but if you've been around in crypto long enough that you've been through a couple of bull runs, if you were around for Sheeb, if you were around for Doge, if you were around for Bonk, if you were around for any of those, Pepe, there's, the list goes on. It's insane the amount of the amount of mind share and the amount of market cap that some of these generate. And with that is transactions and transaction fees on pump.fun and on these chains. And so if, Solana, if it gets that, value capture dialed in, it could be a huge, huge contender and long-term, potential solid investment. Not financial advice, I'm not a financial advisor, but just looking at the fundamentals of, the token and, looking at things like this, like, the amount of transactions on chain. You can see that it's pumping, in a bear market. It's just up and to the right. Let's, go ahead and give your 2 cents, and let me look at some of these other chains and see what they're looking like.
I'm always thinking about the trifecta. And so one of the most important pieces of that is user growth, user adoption, product market fit is what drives that. So, both of these chains, because we're going to be taking a look at the Just Lend money market and DAO today.
That's
on the Tron chain. Yeah.
Yep.
There's like almost 100. Look at that. Wow.
Up and to the right. Let's look at weekly. Yeah, look at that. Those are weekly bars.
Okay, so how about on the monthly? Let's take a look at the monthly there. How many transactions are we looking at there? 400 million, 600 million?
About 385 million per month.
Wow. Okay. So, these are the metrics that we track. This is important stuff right here. You need user adoption. There's almost $100 billion of USDT on Tron. And what do people use it for? Well, payments and remittances. And where? Southeast Asia and Latin America mostly. This is a very cheap chain to operate on.
Well, and and David's right. I mean, we can't stress this enough. The reason that we look at data is it's unemotional. It's fact. It can't be debated. That's why we focus so much on pointing out the facts. If it's people can call it FUD, but data doesn't lie. As long as the data is solid, as long as you understand where the data comes from, and as long as the data is valid, then it's a solid foundation to where you can stay unemotional about your investments. And if you find projects like this, I mean, if you look, Tron is doing extremely well. Let's look at Hyperliquid. Let's pull up transactions on Hyperliquid.
And I was just taking a look at the BNB chain. It's got greater than 400 million monthly transactions also. So these are all of the coins and the projects that we highlight. Wow. Okay, so Hyperliquid. Let's take a look.
What's that?
Let's take a look. So this is daily. Let's zoom out to monthly so we can compare these on a monthly basis against one another.
It's only been tracking it for 3 months, it looks like.
Oh wow! So what did it last month? 15 million or so. It looks like.
Yeah.
So this is an app chain. This is just an app chain. So we're talking about 15 million monthly transactions, for perp traders on Hyperliquid. So I think this is pretty impressive. And that flywheel is definitely working for the Hype token. So, we talk about Canton.
I don't know if it's just on my end, but you're breaking up a bit, David.
Okay. Well, hopefully that gets a little bit better. I don't know what else to do about it. Maybe something with my internet connection, you think?
There you go. It's smoothed out.
Cool. Yeah, so I mean, let me disconnect from my VPN. I think that might help.
Yeah, I started doing that while we're live just to help out. Let's take a look at some of these other ones. Let's look at Base. This is one of my favorites. It doesn't have a token, but I mean that's kind of what I like about it, to be honest. So yeah, no, it's been dropping off.
Is that Base? Yeah.
Yeah. So
that's the
like,
weekly.
Well, I mean, so far, just in July, so far, we're only 10 days in, already 40 million transactions.
Yeah, well, 40 million transactions is not nothing.
If it keeps pace, I mean, you're looking at what, 80, 120? You're looking at 120 million, which would break the all-time high back in November of 2025. If it keeps pace.
So that's a weekly. If you zoom out there from a weekly to a monthly, and then why don't we compare Base to Arbitrum? Because those are the two layer 2s that I use most often on EVM.
Thank you for correcting me on that. All right, so looks like November of 2025 was 406 million transactions. And so far, there's been 75 million this month. So what, times 4? You're looking at, that's still looking pretty fucking solid.
I think it looks solid too.
Well, and it looks like over the past couple of months, it's been on an uptrend. So, all right, you said Arbitrum?
Yeah, so I would compare it to Arbitrum and then maybe, Polygon and Plasma and Monad, seeing as how those are also layer 2 rollups or layer 2 chains.
I wish there was a way that I could just overlay them all together.
You probably can. DeFi Llama has a free API, so we could build a little tool that would overlay transaction volumes for all of these chains on top of one another. So that's the weekly. Let's see here. I mean, so this is Arbitrum. Is that you or is that me?
Yeah, it looks like it was me breaking up.
So if you zoom out there, Mike, to the monthly, let's take a look at the monthly.
All right.
Okay, what are we looking at here? 100 million, something like that?
21 million so far this month.
And what did Arbitrum clock in at last month?
Last month, you're looking at about 68 million.
Okay. So, we started this conversation off by talking about the transactions on Canton. And 60 some odd million transactions over the last 30 days on Canton. You compare that to these other chains, and how long has Canton been around for again? Not very long, I don't think.
No.
So to have all of these transactions, just in such a very short period of time, that is encouraging for sure. And looking forward to seeing that launch of tokenized equities and tokenized what is it? They're going to be able to trade treasuries in a different way on there. Looking forward to seeing what that does to transaction volume.
Yeah, right now we're looking at volume. Well, and the problem is on DeFi Llama, it's only measuring DeFi. It's not measuring the entire chain. And with Canton, like we said, Broadridge is the customer that's generating all of the fees and everything. That's not counted. That's why when you go to DeFi Llama and you see $251,000, I about choked on my tongue when I freaking first saw this. I'm like, what the hell? And then I realized that you come down here and it doesn't count the
So you know who's going to be able to shed some more light on this is the gentleman that you're going to have on later on tonight. So he'll be able to speak to this. I think if I had to guess, I think that it's because the majority of the transaction volume on Canton is private. I think that's probably why DeFi Llama doesn't pick it up.
Well, I think it's that, but it also, because remember we actually was dug into this at one point, and it had to do with that it doesn't take into account RWAs. That's what it was. It doesn't take into account RWAs, and that's what Broadridge is. Those repo markets, like that $300 to $400 billion, it's all RWAs, and so it doesn't count RWAs on DeFi on any project.
Got it.
Like on AVAX, on the XRPL, Ethereum, whatever. It doesn't count RWAs. So anyway, there is that. So let's see what other news we got. So it looks like Morpho and Solana integration. So bridging via Sunrise. Because Morpho is native to Ethereum, deploying it to Solana required a specialized architecture. It is launching via Sunrise, a dedicated layer. I mean, another bullish thing for Solana. Crypto Stevo would love that. It's designed to bridge and translate execution between Ethereum primitives and Solana's high-speed runtime. The result, Solana users and applications get the security and design of Morpho's lending markets while accessing Solana's ultra-low transaction costs and sub-second settlement speeds. Why this is a game changer is Solana has phenomenal retail velocity, like we just showed, and dominates the industry in tokenized real-world assets. I disagree with. We've seen Canton, and Ethereum are the ones that dominate. But its native lending ecosystem has historically been highly monolithic. On legacy monolithic lenders, if a single long-tail asset suffers an exploit or an Oracle failure, the risks can socialize and threaten the entire capital pool. We've seen this recently. The Morpho solution. Morpho brings its signature isolated market architecture. This is what we covered with the Aave incident, to Solana. Anyone can spin up a localized lending pair, for example, USDC against a specific tokenized RWA. If that RWA market goes bad, the fallout is completely contained. This is the importance of these DeFi protocols that have these these architectures where the liquidity, it isn't a shared pooled liquidity, and that's what a contributor to what happened with Aave is that and 2 weeks before that happened, again we did a deep dive, which led to David pulling his Ethereum off a couple of days before all of that. But that was one of the red flags that we talked about. Was you need to understand, if you're going to provide liquidity on these platforms, you need to understand the architecture and mechanics and the risk that you're taking. So, David, what do you think?
Yeah, so I mean, Aave v3, that pooled liquidity model is flawed. And that's why the layer 0 exploit was able to impact Aave v3 in such a negative way. And so, when you take a look at a lending market, a money market like Morpho, it's a completely different architecture, isolated pools of liquidity rather than a shared pool of liquidity that you see on Aave v3. So, what I'm seeing here about Sunrise, because I'm not all that familiar with Sunrise, Mike. It says that Sunrise is an asset gateway and liquidity hub for Solana. So I guess when tokens migrate across different blockchains, well, this is obvious, right? They do suffer from fragmented liquidity, and you can get confused with these wrapped tokenized versions or bridged tokens. Especially beginners get confused with stuff like that. And so if there is a lack of depth on dexes and you have like a wrapped token, you can suffer a lot of slippage when you bridge, asset A from chain A to asset B on chain B, and you get, maybe not the native coin, you get a wrapped version of it. If there's insufficient liquidity on a DEX, you're going to suffer a lot of slippage to swap out of that wrapped coin. So it looks like this Sunrise is solving for that with Morpho launching on Solana. It's got instantly deep tradable and canonical market depth across all of these Solana trading surfaces like Jupiter and Orca and Meteora and Radium and Phantom and Soulflare. So, these are the surfaces on Solana that most people are going to be trading on. So with Morpho Blue and these Morpho Vaults, expanding onto Solana, the really cool thing here is the Coinbase Solana-backed loans. So Coinbase integrated Morpho's infrastructure to offer Solana-backed loans. And that means that if you are if you deposit Sol, you can borrow up to $100,000 in USDC at relatively low interest rates. And this is all being routed trustlessly through Morpho on the back end. So that is pretty darn cool. Really like to see that type of integration. I think it's probably just going to drive more and more adoption of these different technologies, especially during this next bull, when we start to see these tokens move back to the upside again. So, just laying the foundation for continued user growth. And, these assets are being integrated into everything. This is becoming the new financial system, whether it's, Solana or Ethereum or Tron or Canton or, you name it, all of these different chains, the base chain, BNB chain, et cetera, et cetera. We're just seeing more and more adoption, more transaction volume, more integrations with TradFi, more integrations with, basically crypto banks like Coinbase. So I think that this all bodes extremely well for the next bull cycle, because this is like the foundational layer, right? We're building out all of the foundations that we can then build on top of. And man, this is exciting to me. So I haven't really operated natively on Solana much this bear market, but I'm going to in the very near future, as I think we're getting closer and closer every day to a true Bitcoin bottom, for this Bitcoin bear market. And my target for Solana this bear market was down at $30. I'm starting to think that I need to revise that higher, because here's the thing. I'm looking for capitulation in time. Like I'm looking for the bear market to end in time, which I think is October. But I'm also looking for capitulation in price. And I don't think that we've seen capitulation in price yet. But because we're almost out of time for the bear, I'm thinking that, a token like Solana likely will not see $30. I don't think that it's going to see another 60% down. So I'm thinking that maybe if we get another big leg down out of Bitcoin, which is what I expect Bitcoin to move down towards 50. I'm thinking that Solana could move down towards $50 also. So 50,000 for Bitcoin, $50 for Solana. And, that looks like an interesting buying opportunity, especially with all these positive developments that we're seeing.
No, absolutely. Absolutely. I was just kind of going through some of these different data. I was seeing if I could find a way to, I'll have to mess with it more, how to overlay all of them, for so we can see all the transactions together. But the problem is if it's not showing like all of those, RWA transactions for Canton, but see, then you look at 24-hour fees, looks like it is capturing. So, it's 1.8 million, over the past day. The next closest one is 1 million with Tron, and that's another one we're bullish on that, that has good value capture. Solana. It looks like Tron is half of Canton roughly. It looks like Solana is half of Tron roughly. It looks like Binance, BNB, looks like it's roughly half of Solana, and then you got Ethereum. Oh, look, Bitcoin.
So I don't know exactly how they measure that.
Right?
Is that Bitcoin the layer one, or are they including side chains there? What exactly is that?
It's honestly, we need to do a deep dive and figure out. And we've talked about it before. We really need to do a deep dive in DeFi Llama and get a really good. As much as we use it, we really need to get a firm understanding on how it pulls its data, how it reconciles, and how it compiles it, so that we can whenever we're using it, we can actually say, okay, this is where it's pulling the data from, and we can know if it's accurate or not. Because I have done it on some of the data points, but there's so many data points that we really need to understand all of them.
I agree. Yeah, should definitely run some research on DeFi Llama.
All right, you know what? Let me make a note of that. I'll do a deep dive on it.
And I see Doc Green in the chat said that that he or she posted one of our pieces of content in an XRP YouTuber's comments. That's funny.
And the thing is that speaks volumes. I hope that I want everyone to make money. I hope that we're wrong about XRP and the importance of value capture, but everything that we're looking at, the projects that are doing well in this bear market are the ones with value capture. Tron, Hype, Arrow isn't doing as bad as a lot of others out there. There's a lot of projects that have really shitty value capture that are down 95% or more. The thumbnail that I did for today's Cardano, terrible value capture. Really not generating any fees or revenue. The trifecta, that we're always talking about, not a ton of adoption. And, so basically just scores really low on our trifecta, and it's down like 95% and still has a massive freaking market cap. It potentially could go much lower if they're not able to, somehow, pull out of this nosedive. Because look, on this list here, where's Cardano? Is it even? Yeah, there it is, number 31.
Mike, you want to share? That screen?
Yeah. Thank you. Number 31. So there's $73 million total in DeFi. So actually, you know what? Let's sort it by DeFi. It might do better. Let's see. No.
Cardano is in a rough spot, man. It really is. So we've seen this. Yeah, that's
so
not good.
It's below Katana. It's below Stacks, XLayer, DYDX. Never even heard of Rootstock.
It's something to do. I think that's a Bitcoin side chain.
Flare. It's below Flare.
Sad.
Oh, good Lord. Yeah. No, it's just I hate to be the the negative Nancy in the room. But let's talk about Cardano for a minute. Do you see anything that leads you to believe that Cardano can pull out of this freaking tailspin that it's in?
No, especially not when I watch Charles Hoskinson's content. That is some of the most depressing shit in the world, man. Here, let me bring up DeFi Llama. Let's take a look at Cardano. So, this is these are just DeFi Llama data here for Cardano. This is TVL, and so this is obviously not what you want to see. DeFi TVL just falling off a cliff here from November 2024, where we saw an all-time high on this data set here, and just falling off a cliff all the way down to pretty much close to the bear market lows from last bear. So this is not looking good for Cardano. And then if you take a look at the protocols that are native to Cardano, these protocols all suck. And the reason why they suck is, number one, all of them, the UI, UX, it reminds me a lot of when Base Chain first launched in August of 2023, there were all of these protocols that popped up on Base, and many of them had UI UX that looked like a lot like what you see for the Cardano dApps. It's just not good. It's not a good user interface, not good user experience. But even worse than that is the illiquidity of these protocols. So if you are a large ADA holder, let's say, you can't really do anything with these protocols on Cardano because there is not sufficient liquidity to borrow, really. So if you've got $1 million in ADA, good luck borrowing 500K in stablecoins against it on any of these protocols. I don't think you'd be able to. So that makes them basically useless, these protocols here. So what exactly is the Cardano chain for? You've got to ask yourself that question. And you know, whenever I watch Charles Hoskinson talk about Cardano, man, it does not fill me with confidence. It makes me think like, oh man, this is circling the drain.
Well, didn't he like a couple of weeks ago or something like that? Didn't he, basically come out and say that he was leaving, and then he's like since kind of, walked that back a bit? Or
that's exactly what I heard, and that's what I saw. I watched the same content that you did.
Yeah,
and he was saying he was like, I'm out, and then I'm back. So it's like, what's going on here? I have no idea. But I watched a piece of his content yesterday, or maybe it was Wednesday. Yeah, it was Wednesday. And, we were in the private call. And what we were talking about was just how interesting it was that Charles Hoskinson was talking more about Ethereum developers not giving him credit for the primitives that he claims to have built, rather than talking about how he's going to turn the chain around.
Yeah.
He was just talking about ETH bad, when really what he should be talking about is, hey, you know what? I know that Cardano hasn't been performing. I know that there's a lack of liquidity on the protocols on Cardano, but this is our plan to address that. I didn't hear any of that. All I heard was ETH bad.
Yeah.
So, that's not good.
When you're the captain of a ship, or the face, of the brand, kind of like he is, I mean, you really need to be communicative, and open about the path forward. I mean, that's kind of what a CEO's job is. Like, not to say that that's his role, but it's you're supposed to chart the course. You're supposed to make sure that everyone on your team, understands. Your investors understand. That everyone out there understands. This is what we stand for. This is what we're building. This is the steps we're taking. These are the milestones. This is the timeline. We're meeting X milestones. We missed this milestone, and this is why. This is the adjustments that we're making to get back on track. That's the thing that builds confidence in your brand, is when the voice or the face of a project is coming out and consistently. And I'll give credit where credit is due. It's something that Brad Garlinghouse does really well as the CEO of Ripple. They're constantly shifting, their narrative, as far as what Ripple's doing, but he's very open about the moves that they're making. He's always on, different news outlets and talking about, like I said, we're going to tell you the positive and the negative. I mean, I'm not bearish on Ripple, the company, but he's always on MSNBC and Yahoo Business and, doing interviews and talking about, acquisitions that they've made and what their plans are with that acquisition, and what licenses they're going after so that they can become a bank, and so that they can operate in certain financial jurisdictions. And he's very, very good at that, and that is what more of these crypto projects need. It was one of my big critiques on the Kita network was the CEO Ty. He has talked about, adding fees for anchors and things like that. And there was a announcement in the past couple of days where it looks like that they're going to implement that, but they weren't very clear about what that was going to look like, and in the official documentation, it's, there's a lot of things that they claim is part of the tokenomics and things like that, but they don't really detail it. I think it is the responsibility of these different projects to be very clear about what it is that they, the current state of what, where they sit, what they're doing, what the tokenomics, the mechanics, what they're building out, who they're working with, as much as possible, aside from NDAs, and then, try to paint a picture of their path forward, because that is what, again, is going to build confidence. So anyway, that's
who's steering the ship over there in Ada World. I have no idea.
Because he claimed on the video, on his video where he was leaving, he was claiming that he has no control, that he's tried to make things happen, and they're not allowing him to make things happen, and that's one of the reasons he was leaving. So it's like, okay, if you, the founder, aren't calling the shots, then who is?
I have no idea, but Mike, I'll tell you, I've met a lot of Bitcoin core developers, guys who actually build on Bitcoin. I've met Ethereum devs. I've met Solana devs. I can't say I've ever met a Cardano dev. So I have no idea who's actually building on Cardano. It doesn't look like anyone's building, because what I'm sharing here, this chart, this is stablecoin market cap, but I deselected fiat. So the fiat stablecoin market cap here, I removed. I'm looking only at crypto and algorithmically backed stablecoins. Yeah. So on chains like Ethereum and on Solana, you're actually seeing, you've got big products, algorithmically backed stablecoins on those chains. You don't have any of that here on Cardano. So where's the innovation?
Without stablecoins, you don't have DeFi.
I don't think you do, and so if I just remove the algorithmic stuff and select only fiat backed, so we do see growth in fiat stablecoins on Cardano, but it's still very small. $54 million in fiat. This is basically like USDC, I think. So like if you compare this to literally like small just protocols on Ethereum or Solana or Tron or BNB chain or Base, if you just compare this stablecoin market cap to any of those chains, this pales in comparison. And so this is why there is such thin liquidity on Cardano. This is why you can't get anything done on those Cardano native protocols.
On Base Network, it's almost $5 billion in stablecoins.
See, like
so what's that? That's like a freaking what, a 100x?
One tenth of 1% or something.
Yeah, that's like 100x. Am I
doing? It's 1%. So 50 million is so Cardano stablecoin, fiat-backed stablecoin market cap is 99% less than just the Base chain, if I'm understanding those data correctly. Yeah, that's pretty poor performance, if you ask me. Yeah. And it's just all of these things compounding. Mike, we've done so much deep dive research on these protocols over the last couple of months, and we're seeing the same type of pattern emerge over and over again, where if a chain, when it launches, does not almost immediately have real adoption and user growth and transaction growth, then eventually the budget to pay validators to run nodes and validate transactions on the chain, eventually that security budget runs out. And those validators say, hey, I'm not being compensated for running this, so I've got to step away. And then the chain dies. So I think that circling the drain, where the validator security budget just kind of goes away over time, I think that we're going to see more and more chains die that slow death. And that's what it looks like over here on Cardano, man. It looks like this thing is dying to me. So what would fix this, right? How could this turn around? Well, you need a leader. You need someone to get out there and say, hey, this is not working, and this is the plan that I built to fix it. And Cardano doesn't have that. Instead, it looks like infighting between Hoskinson and the DAO. That's what it looks like. And so, that does not instill confidence. So for anyone who, bought ADA, if I just take a look at the chart here, for anyone who bought ADA, anytime really in the last 6 years or so, all the way back to 2020, it's trading at where it was back in 2020. So for anyone who bought, within the last, what is that, 6 years, you're either flat or underwater, and more than likely, very underwater.
Well,
So,
welcome to the show. New viewer. I haven't seen the name before. Not even going to try to pronounce it. But it looks like this individual bought ADA at 7 cents, and and is talking about the Ouroboros is dead. How about the Japan devs? Is Ethiopia community still building on ADA? It's all been silent. That's, to me, that is not a good look. When you're not hearing news, when the team is not transparent, when Ave, when that whole kind of exploit went down, and they were that they used Ave to abscond with hundreds of millions of dollars in liquidity. It was not a good look. Ave went silent pretty much for, like, what was it, a couple of days, almost a week,
I
where
know. It was
that was
horrible.
not good. Like, that right there, it's going to take a quite a bit before I'll put any liquidity on Aave after that. Because what that told me was that they, how do I put this? What it told me was that transparency was not a focus for them. That, and I get it, they were probably busy trying to figure shit out, but there isn't in a company that size, there isn't like a marketing director or some PR guy that should have been on there. They should have had a PR team burning 24/7 on shifts, giving updates about, hey, this is what's going on, this is what we found, this is what we're doing to resolve it. That is what a solid company does, not go fucking radio silent.
I mean, how many billions of dollars ended up getting frozen in the ETH markets across multiple chains on Aave v3? And then the stablecoin markets essentially froze up too because they were sitting at 100% utilization. But it wasn't just the layer 0 exploit, it was everything leading up to it too, in the months and months leading up to that, where the Chan Initiative was fighting with the Aave DAO because they weren't getting compensated appropriately for all the incentivization that they were putting out there. You had the risk team exited, and then you had the dev team that built V3 exited
within like a month or two of each other.
Yeah, those were all like wake up calls for anyone who follows this space to say, hey, there's a problem at Aave.
Yeah,
and now Aave v4 is the product that everyone has to be looking towards. Now, the thing about Aave is they do generate a lot of revenue.
Yes.
And those revenues do return to token holders in some way. Yes. In fact, it might be a good idea for us to take a look at that, so that we can compare the value capture mechanisms for Aave and Morpho and Euler, and then also Camino.
That would be a really good episode, comparing apples to apples. So not just focusing on value capture and revenue, but actually doing a side-by-side comparison with like the top 3 or the top 5 borrowing and lending platforms, and then do the same for like Uniswap, Aerodrome, and in the liquidity pools, the LPs,
Jupiter, Meteora.
Let's do that next week.
Yeah, that's a good idea. We should definitely do that, because I'm taking a look here at the Morpho token. Now, this is a weekly. Morpho is nearly at its all-time highs. All-time highs come in, it looks like on these data set, $2.42. So this is, Morpho is within a stone's throw of printing some fresh all-time highs here. If we take a look at the Aave token, sitting at $95, well off of its highs. And during the past bull, Aave was unable to put in a fresh all-time high.
Both of those two patterns make 2 M's. They're telling you that Morpho.
Go to Morpho.
Go to Morpho.
Yeah, but I mean, say Morpho, Aave, and then let's take a look. What's another EUL? That's the Euler token. Morpho, Aave, Euler. Here we go. This one, yuck, man. So yeah, this Euler token doesn't look too hot. How about Camino, KMNO? Let's take a look at Camino. I haven't looked at this in a while.
Ginger Prince says Camino. Camino. I have not heard of that system. It's a Star Wars reference.
Oh, got it. Yeah. So this Camino doesn't look too hot though. So if you've got to choose one of these to buy, it's got to be Morpho.
Yeah.
Even though it's trading at a greater multiple, like the price to revenues for the Morpho token, that is at a higher level than it is for Aave. So you're paying a premium for those revenues when you buy Morpho. You're actually buying revenues at a discount if you own Aave.
The only thing that bugs me about Morpho is there is really no way to earn with it. I mean, for a DeFi platform, you would think that the token would have some, way that you could, stake it, that you could borrow it, against something.
Yeah, I haven't really looked into being able to use the Morpho token itself in DeFi, but it's definitely worth looking into. What we could do is I could hop on over to the Morpho DApp, the money market.
Well, and Crispy makes a valid point, and this is true of a lot of these tokens, that have value capture. Is they move at weird times. If you look at Kent, it has a mind of its own. When the rest of the market pumps, it's either steady or it might even be a red day. And when the rest of the market is down in red or flat, Canton will pump a little bit. It just like has its own freaking thought process. It's the same with Tron. It's the same with Hype. It's the same with Morpho. It's the same with a lot of these tokens that we've gone over that have solid value capture.
So it looks like you can borrow stables USDC against Morpho on ETH mainnet. So you can do that on Morpho. Okay. But
I'll correct myself.
But this isn't real utility, though.
No.
This would just allow you to maybe exit a position or take some leverage against a position if you want to. But what's the actual utility within the Morpho DApp itself? Is this just a pure governance play? I don't think it is. I believe that there is some value accrual, but exactly by what mechanism? And good afternoon, Ivan Kareev.
Welcome back, Ivan.
Absolutely, man. So, this is definitely one of my favorite plays when it comes to money markets, though. So I think that, we should compare these apples to apples. Morpho, Aave, Camino, Euler. There's maybe a couple of others that we could look at too.
So this weekend, I'll make it a point. I need to do some work on the new property, but I'll do a deep dive on DeFi Llama. I'm gonna have to rewrite the prompt I really want to focus on how does it compile its data. And then next week, we will do side-by-side comparisons with borrowing and lending platforms, and then protocols like compare Uniswap to Aerodrome and Camino and Things like that. So that and Jupiter, so that we can get an idea of how they compare. We can look at the price appreciation, kind of the price movement, the value capture. Maybe we can talk about like sometime after this show, or sometime this weekend, maybe on Sunday during the meeting, we can talk about kind of what points we want to focus on. So like value capture, TVL, volume. A stable coin, I don't know. Well, anyway, we'll talk about it.
Yeah, no, absolutely. We need to be able to compare these on an apples to apples basis, right? And Ivan, I love that you're back, man. You're here for more nonsense. Love it. Love it. So, and Ivan, you should hop into the chat, man. Hop into the chat over here in the source room. So, as we go live and start presenting all this content, I just posted here. This is the deep dive that we're about to go through. Sentient. I don't know anything.
Yeah.
About Sentient.
Let's actually, I don't either. I ran across it. I was kind of going down the list, and it just popped up on my radar. So let's go ahead and dive into those.
Awesome, man. So I'm actually, because there's that link, you see this link here to share to X? I just click the link, and I am going to tag you, Mike, at the Node Network with this post here on X, because hey, we're going live with it right now. So let's do it, man. I'm gonna hit play.
Web3 engineers attempting to integrate artificial intelligence face a strict binary choice: rely on highly capable models locked behind closed corporate networks, or build on open source models that lack the economic structure to survive. The centralized systems come with severe systemic risks. A consolidated corporate oligopoly controls the underlying data flow and dictates rent-seeking billing structures, leaving developers entirely dependent on ecosystems they have no power to govern. Building a decentralized alternative requires solving one specific technical bottleneck: the free extraction of model weights. This animation illustrates the current parasitic value loop. When a developer releases an open source model, third-party aggregators simply download the weights, put them behind a private API, and charge users for access. The original creator receives zero compensation for their work. Until open source AI developers have a mathematical guarantee that their localized work will generate direct revenue, the decentralized ecosystem cannot economically compete with centralized corporate infrastructure.
So I just want to pause it here for a second, Mike. I don't know what chain or what sentient actually is yet. I'm sure that we're going to get to that in this deep dive video.
It's AI. It's an AI play.
So I did see that on BitTensor Tau, and we would need to verify this, but I did see that Venice AI may have launched a subnet on BitTensor Tau. So that's a question. I'm not making a statement of fact. I'm just wondering, because I did see it on X, and if you see something on the internet, it must be true, right? So verify, don't trust. But
the Sentient protocol attempts to solve this structural flaw, offering a cryptographically secured architecture to build a community-owned AGI ecosystem. It relies on two main components. The first is the Open, Monetizable, and Loyal, or OML framework, which resolves the weight extraction problem by enforcing software licensing directly on-chain. The second is Roma, an orchestration layer that networks multiple specialized intelligence agents together to execute complex queries, bypassing the need for a single, massive, centralized model. OML secures the individual models, so their creators capture revenue, and Roma coordinates those models to deliver high-end computational performance. Let's break down exactly how this mathematical and operational stack functions to replace the centralized corporate server farm. The entire system operates on a base execution layer called the Global Research and Intelligence Directory. This diagram visualizes the grid, a registry mapping modular machine intelligence known as artifacts, like independent models or search libraries. Advanced reasoning emerges through the compositional cooperation of these distinct artifacts, rather than relying on a single monolithic neural network. The network powers these artifacts using raw compute orchestrated through eigenlayer restaking.
Okay, so eigenlayer. So I'm still trying to figure out, what chain does this protocol operate on? The fact that it's mentioning eigenlayer tells me that it likely has something to do with an EVM chain, potentially.
But indexing highly specialized independent models on a public directory exposes them to immediate extraction. Securing them requires an entirely new cryptographic approach. The solution is the Clopin model. The neural network's weights remain open, available for anyone to audit or download, but the model's ability to execute a query is cryptographically locked to a programmatic authorization. This equation demonstrates the OML transformation. A standard computational graph F is modified into F tilde. The protocol injects a commitment transform, permission token generator, and a verification operator.
I gotta just say, Mike, I love this type of mathematics. I really do.
That verification operator mathematically entangles execution, only outputting a valid response if the host processes a permission string generated by the owner's private signing key. Generating real-time zero-knowledge proofs during every single neural network forward pass is currently too slow and computationally expensive for consumer-grade applications. To solve for inference latency, Sentient deployed OML 1.0, an optimistic security model powered by AI-native fingerprinting. As seen in this weight matrix diagram, unique fingerprint keys and target responses, like answering apple to favorite animal, are embedded into a host's specific downloaded model. They are injected amidst visual static representing train prompt augmentation. which trains the fingerprint alongside randomized prompts. This forces the network to retain the fingerprint response, even if a malicious host alters the input context. These invisible watermarks act as undeniable cryptographic proof, linking a specific hardware host to their exact downloaded copy of the model weights. For honest actors, the process operates smoothly. A model host requests permission, pays a cent licensing fee, and executes the user's inference. A malicious host will try to bypass this smart contract, downloading the open weights, running the model locally, and answering user queries without paying the fee. Sentient counters this extraction by deploying a decentralized network of provers, independent auditors who continually test public-facing hosts. This flowchart tracks enforcement. A prover pings a suspected host with a secret query. If the host returns the watermarked response, the prover checks the on-chain ledger. Finding no transaction receipt, the protocol verifies the violation and slashes the malicious host's escrowed sent collateral. Those funds are redistributed. A portion rewards the prover, and the remainder is split between the original model owner and the treasury. The protocol is also developing hardware-level prevention. By transitioning to the Sentient Enclaves framework, they will use trusted execution environments to physically isolate model weights and enforce real-time permission checks. Under the current OML 1.0 system, the strict mathematical certainty of losing escrowed collateral ensures that paying the protocol fee is structurally more profitable than attempting to steal the open-source model. With the individual artifacts economically secured, the network has to coordinate the execution of over 110 different models currently indexed on the grid. Monolithic AI models frequently fail at long-horizon tasks due to compounding planning errors. If an agent hallucinates a detail in step 2 of a 10-step sequence, that error cascades, and the entire execution fails. Sentient Labs mitigates this operational bottleneck through the Recursive Open Meta-Agents Framework, or ROMA. This diagram visualizes the ROMA control loop. Instead of linear prompts, ROMA decomposes goals into a dependency-aware task tree. First, the atomizer assesses the query. Complex tasks shift to the planner, which splits them into parallel sibling nodes. These hit the executor stage, calling secured artifacts on the grid. Finally, the aggregator synthesizes the outputs into a single delivered result. This parallel task decomposition enables rapid infrastructure scaling, allowing the network to achieve sub-2-second latency on 70 billion parameter multi-agent loops. Tying ROMA's execution layer directly to OML's security requires a specific economic engine, the Cent tokenomics architecture. Cent operates as a utility and coordination asset. It captures value actively through delegated staking, licensing fee distribution, and collateral slashing, rejecting the standard passive medium of exchange model. The primary value accrual vector for token holders is revenue-weighted delegated staking, which curates the network and distributes the protocol's emissions. This animation tracks token holders delegating staked Cent into specific artifact nodes on the network map. The target 2% annual token inflation is routed exclusively to these artifacts, scaling dynamically in direct proportion to their real-world usage and generated transaction fees. This staking architecture forces a self-reinforcing curation loop. Capital and emission rewards flow strictly to models that prove their utility through high transaction volume. The Sentient protocol combines these two frameworks to scale decentralized AI. ROMA manages the execution layer required to process complex intelligence, and OML provides the cryptographic economics needed to compensate the developers who build it. Structurally, the ecosystem bifurcates its operations. The nonprofit Sentient Foundation manages open-source academic grants and treasury disbursements, while Sentient Labs handles the commercial engineering of these developer tools. To enforce this long-term strategy, the core team locked their token allocation behind a full 1-year cliff, followed by a 6-year linear vesting schedule, ensuring patient capital commitment to the network's growth. By replacing unmonetizable open-source models with cryptographically entangled artifacts, Sentient provides a mathematically viable, community-owned architecture capable of matching the scale of centralized corporate networks.
Wow. Okay, that's pretty interesting, right? And if I take a look at this Sentient token, trading right now for 1.5 cents, market cap $108 million, and let's see here, total supply 34 billion Cent. Looks like it's got an unlimited max supply. Although it did say that it was inflationary only to the tune of 2% per year, I think. So if I take a look here at the performance of the token, this doesn't look horrible. There are a lot of vaults out there that look much worse. And let's put it that way.
When I'm comparing this turd to this other turd, this turd is a little shinier than that turd.
Yeah, basically. But this is definitely something interesting to watch, right? So let's see here. How can we use this? How could we actually use this? So here's the official website, sentient.xyz. And I just got to say, as an aside, since SpaceX and XAI purchased Cursor, and just in the last couple of days launched Grok 4.5 fast heavy on Cursor, I've been building with Grok 4.5, and it has been by far the most useful model I've ever worked with, and the cheapest. And it's not even close. So that's kind of a big deal here. But if we're taking a look here at Sentient, this is I believe, for open weight models. Now, Mike, have you come across Hugging Face? There's a Tor or a BitTorrent. There's a BitTorrent site. I think it's called Hugging Bay. You remember Pirate Bay? Remember that?
I do.
So Hugging Bay, I believe that's the name of it. Hugging Bay is for open source, open weight models, where people who are running these things locally or running them in the cloud for themselves, they can download them, I believe, from Hugging Bay. And it looks like Sentient is doing something quite a bit different, but again, for these open weight models. So this is interesting here. It says build AGI. What are we doing with this? Products, agent development, agent experimentation, and model ownership, open, monetizable, and loyal AI, OML. So it looks like this is their white paper, or maybe this is like a research paper. So, okay, so who are the authors? Guy at Princeton, all right, Princeton University, Sentient Foundation, University of Washington. Let's see here, Princeton again. Yep. So just taking a look at a little bit more information about this Sentient protocol. Now, I want to hop back in here. Let's see, how can we use this? How to build a faster and smarter, how can I actually use Sentient protocol? Maybe Arena, compete on the hardest AI reasoning benchmarks and earn prizes for original solutions. $50,000 in prizes so far, okay. How can I win some prizes by completing some type of operation on here? I wonder. Compete now. Active challenges. No active challenges right now. Oh, that kind of sucks. But it looks like it started and then ended April 6th. Okay, so that's a shame. Nothing going on in the arena here. So I'm going to have to go back to the homepage for Sentient and products, Evo Skill, Arena, OML, Eldros. Diagnose enterprise agent failures. Evo Skill. What is Evo? Oh, I get it. Okay, so you've got to build the repo to be able to use this. Okay, no problem. Let's see, what else do we have going on here? Research, papers, brief, GitHub, Hugging Face.
I got some of the model partners and the agent consortium list. So it looks like their model partners are Aether, which of course I've heard of, Bagel, Crunch DAO, DMind, Eigenlayer, EXA, Fractional AI, Giza, IONET, Cajun, Lagrange, Napkin AI, Open Gradient, Pearl, Fala, The Graph, and Fireworks. And then it looks like their agent consortium. It looks like Arkham, Akash. I'm just going to name the ones that I've heard of. Base, Billions, Chainbase, Cluster Protocol, DAppLocker. What else? Franklin Templeton. That's a big one. Kaito, Masari, Near, OpenLedger, Polygon. So there's some names here. I'd be interested to know how deeply they are using them, though.
Me too. So I'm taking a look here at their X, and they're talking about harnesses, of course. Let's see here. What else we got going on? Machines power the last revolution. Apple's in talks with Prism. Well, this is definitely super interesting. And if they're integrating into those decentralized plays like IONET and Aether, et cetera, well, then it's probably being used for something. But I wonder what the value accrual model is for that cent token, because I wasn't quite able to tell what the actual model is, just based on that piece of deep dive research. But if I had to guess, just looking at the token, see, here's the thing: it doesn't look horrible. And there are many, many altcoin charts out there that do look horrible. So just the fact that it doesn't look like shit, it's a positive thing. So yeah, man. Let's bring it on back to the Intel library. And we're gonna hop on back in here. Okay, so ready for prime time. The Just Lend DAO. This, I'm sure, will be interesting. Now, before we start playing that piece of content, what I want to do here, Mike, is I want to hop on into DeFi Llama, and I want to just take a look on the Tron chain. Here's Tron. So I want to take a look on Tron, 90 some odd billion dollars stablecoin market cap. Pretty significant here. Let's take a look here at chains, and then we're going to go to, as we scroll down, we're going to click on Tron. And from Tron, we're going to take a look at that Just Lend DAO, or this is the Just Lend money market, the lending protocol. So this is actually quite useful on the Tron chain. And also, it makes money. So that's a big deal. So let's go ahead and bring it back on over here to the Intel library, and I'm going to get started sharing this content. I've got to share my screen over just one more time here so that we all get audio on this. So let me go ahead, hop in, share audio, and let's hop to it. Awesome. Add to stage. Oh, whoops. Yep, there we go.
By mid-2026, the movement of capital within decentralized finance has shifted. Value is increasingly flowing toward consolidated chain-native monopolies rather than fragmented cross-chain applications. On the Tron blockchain, that monopoly is Just Lend DAO. Functioning as the primary liquidity hub for the network, the protocol captures a fraction of the value from nearly every transaction executed on the chain. Tron processes over $2 trillion in quarterly USDT transfers, providing Just Lend a massive captive market. While competitors split liquidity across multiple Ethereum layers, Just Lend consolidates up to $6.5 billion in total value locked entirely on its native chain. Just Lend functions as a structural monopoly, executing a system-wide realignment of its lending and collateral architecture in real time. Analyzing this protocol requires tracking two distinct parallel operations: the management of risk and the generation of revenue. In early 2026, the protocol achieved its technical objectives for a major architectural shift. The goal was to isolate systemic risk while maximizing the cash flow extracted from active borrowers. The results were operationally significant. The protocol now generates enough net income to execute one of the largest programmatic token burns in the history of DeFi. Yet, despite the destruction of millions of dollars worth of supply, the market valuation of its native asset, JST, has not moved. To understand why this massive extraction of wealth failed to drive the token price, we first have to map exactly how the Just Lend machine processes collateral and quarantines risk. Just Lend originally utilized a monolithic pool model. Under this design, every asset deposited by a user was aggregated into a single shared smart contract to create a deep market for borrowers. This architecture prioritized capital efficiency, but forced a dangerous trade-off. Because all assets were stored together, they shared the same systemic risk. If an oracle failed or a volatile asset was manipulated, the insolvency.
So this is the same issue. It looks like it had the same issue as Aave with the pooled liquidity.
There are a lot of money markets that have fallen victim to this architectural failure, where you've got pooled liquidity and then there's some type of systemic contagion that really messes up the entire protocol.
Let's see if they fixed it.
The toxicity would bleed into the shared reserves. This bad debt propagates mathematically. Because depositors hold claims on the entire pool, a single obscure market failure could drain the stablecoin reserves, threatening the solvency of the multi-billion-dollar platform. As the protocol's total value grew, the shared liquidity model became a source of systemic risk that the DAO could no longer tolerate. In June 2026, the DAO launched the Supply and Borrow Market V2, a dual-layer framework designed to isolate these failures. The top layer is the vault, acting as a capital aggregator. Depositors supply funds, and the protocol balances capital across various markets. Beneath the vault is the market layer, where collateral and borrow pairs are segregated into independent silos. If an
Nice.
oracle failure
So
occurs,
this
the
is like
bad debt is
what Morpho
quarantined.
did. This
Yeah,
is
this
what
ex-
Morpho did, where it basically quarantines each of these money markets, each of these pairs, to where if one of them ends up getting exploited, the other ones are safe. So yeah, I very much like this.
me too.
The isolation walls prevent the insolvency from reaching other assets or the vault layer. To manage liquidity in these silos, JustLend replaced static interest rates with an adaptive curve model. If a specific pool reaches
Just like Morpho.
a
Yep.
critical utilization threshold, borrowing costs programmatically spike. This creates an immediate incentive for borrowers to repay debt, ensuring depositors can withdraw their capital at any time. SBM v2 allows the protocol to pool capital for yield while mathematically isolating the risk of a single asset failure. With the new architecture in place, the protocol moved to eliminate its most volatile collateral. In late 2025, the DAO officially sunset the algorithmic stablecoin USDJ. To clear remaining obligations, USDJ was converted to a fixed exchange rate, where holders could redeem 1 USDJ for exactly 0.05 TRX. The protocol then integrated institutional-grade assets like USD1, which is backed by US Treasury bills, and the U stablecoin through Proposal 40. By replacing algorithmic experiments with fiat-backed collateral, JustLend resolved its structural vulnerabilities and cleared the path to focus on revenue extraction.
Wow, that's a good thing. This is what we're always talking about. They fix the architectural problems, and now they're focused on improving the value capture model. I like it.
Well, and I'm looking at the price of in some of the the data. I actually just added it to my watch list. So it's up about 4.5% today. It's up 15% this week, and it is year to date. It's up 150%. It is down 51% from its all-time high, but it's overall performing much better than most of the market.
TRX, yes, it is. And if we take a look over here at TradingView real quick, just to check out the token. So
Well,
this
no,
is.
I'm talking about JST, the JST token.
Oh, great. Here, let me take a look at JST. I don't have that one on my watch list. So JST USDT. So just want to make sure that this is the right one. Is this the correct?
That's
I
it.
mean, hey, this is so from a technical perspective, this looks really good. So if we just throw down a level of resistance like that, so notice we've got a breakout and confirmation of the breakout. So this is, and we've got a swing, a trend change.
Yeah.
So this all-time high, or not all-time high, this high here, putting in a higher high, correcting, but then breaking out, the trend has swung to the upside. And so if we want to go ahead and project out and say, okay, where could this go? Well, now that it has solidly broken out above this level of resistance right here, you might want to start thinking about this level as a target. That's 11.6 cents. It's only a couple of percentage points higher, but get above this level, 11.6 cents, and then you got to start thinking about the old all-time highs on this data set anyway, all the way up here at 20 cents. So that's a double to get back up there.
That's 50%. If it gets back to all-time highs.
Well, yeah, I mean, to go from 10 cents to 20 cents, that's a double. So that's a 100% return to get back up to the all-time highs.
Yeah.
And so, this is just like amazing to see a token perform this well during a Bitcoin bear market. This one has to get added to my watch list here.
I already did.
Yeah.
I was actually looking at what markets that I could get some exposure to it, and it looks like Binance, SumSwap, SunSwap, Upbit, Bybit, BitGet, Gate.io, KuCoin, MEXC, HTX. Oh, Kraken. Okay. Yeah, all right. I can use Kraken.
So yeah, what I would do is I would use SunSwap. I would custody JST spot in my Tron hardware wallet. That's what I would do. All the other ones that you mentioned are all centralized exchanges. I would custody this asset spot. And the way that you can swap into it is if you hop on over here to DeFi Llama, we go back. This is the Tron chain.
And we're not saying do this. We're just letting you know if you like the deep dive, you do your own research, and you think that you'd like to get some exposure to this. This is how you would do it.
Yeah, I'm just saying, hey, if you want to swap into this, if you want to custody this, how would you custody it? How would you get the spot asset itself? Well, I think probably the best way to do that would be over here on SunSwap. And so what you could do is you can connect your Tron wallet up here. I use Tron Link. That's the wallet that I use. And then you can swap from TRX or one of these stable coins. I'll select USDT. And then I want to go ahead and type in here JST. There it is. So let's say you want to swap 1,000 USDT for JST. The slippage here is minimal, very, very, very small. So that's good. That's very good. That tells me there's a deep
liquidity. Yeah.
Exactly, deep liquidity. So far with JST and Just Lend the DAO, so far so good.
This revenue is captured through JST. To avoid regulatory issues, the protocol uses its net operating income to buy back JST on the open market. The buyback treasury is fed by 4 channels: lending market reserves, liquid staking commissions, energy rental fees, and USDD surplus revenue. These funds sweep into the open market to purchase JST, which is then sent to a burn address, permanently removing it from circulation. The milestones for this program are significant. In less than a year, the protocol used over $60 million in net income to destroy 13.7 supply reduction.
So sometimes these videos can get a little choppy from the AI that we use. But what I heard there before the video kind of crapped out was 13-point-something% of the supply has been burned as a result of revenues being used to buy back and burn that token. So that is, a value accrual model.
Programmatic buyback and burns is a repeating narrative that we keep seeing in these strong projects.
Over and over again. Whenever you see a legit buyback and burn mechanism, I mean, this is what we talk about in the trifecta, right? We're talking about
it needs to be automatic. It can't be that there's a treasury and a DAO and there's manual processes. Like one of them we covered where they had like $50 million that they would use, from time to time to buy back and burn to try to mitigate, the negative effects on token price, and that's not what you want to see. You want to see things like hype. You want to see things like what appears that this one is doing, where there's a portion of the fees, if not all the fees, that are used to buy back and programmatically permanently burn supply.
And so one other thing here, Mike, this chart, I believe these data are a little bit stale because price has not been stagnating. Price has been going up. Mm-hmm. So let's see what else it has to say.
Only increases value if organic demand exists on the other side. This model relies entirely on protocol revenue. If Tron's network activity declines, the buyback funding disappears, removing the only mechanism supporting the token's valuation. Programmatic contraction is insufficient on its own. Without utility-driven demand, burning supply results in market indifference.
Okay, but at least if you swap in to this JST token, now this is JST in Bitcoin terms. Now, this looks good. JST going since the start of the bear market, going straight up in Bitcoin terms. You know what else has gone straight up in Bitcoin terms since the start of the bear market? Well, hype, but Tron too, TRX, the native coin on the chain.
Yeah.
So, these, at least when you swap in, or if you choose to gain exposure to JST or TRX, at least if you do that, you've got to know, like, what are you buying? What exposure do you have? you're exposed to the transaction volumes and the revenue and the value accrual model for the Just Lend DAO and the TRX chain. And so as long as volumes continue to grow there, then your investment potentially could continue to perform well. At least that's the way it looks. So going in eyes open, super, super important.
The reason the market refuses to assign a premium to JST is tied directly to the protocol's governance structure. The Tron network is managed by only 27 super representatives.
Right.
Power is heavily concentrated among founder Justin Sun and affiliated corporate entities.
Right.
These entities control approximately 63% of the active circulating TRX supply. This allows them to monopolize voting outcomes on the Governor Bravo contract, rendering retail governance votes largely irrelevant, even with the isolation of the...
So that's not good. That's not good. The whole idea of just trust me, bro, for, a chain like Tron, it leaves me a little bit uneasy. But, the tokens, plural, seem to be performing pretty well.
V2 vaults, the system is still exposed to technical risks, particularly its dependency on WinLink oracles. Any pricing lag or network congestion could still lead to wrongful liquidations or the drainage of funds. Just Lend DAO has built an efficient, cash-flowing lending engine, but technical optimization only goes so far. Until it addresses its governance monopolization and creates genuine demand, no amount of burned tokens can force the market to value a protocol that lacks true decentralization.
Okay, so it's definitely correct when it says that it really lacks true decentralization. That's true. That's for sure true. But there are legitimate value accrual mechanisms. There is real transaction volume, and it seems to be growing too. There are deep pools of liquidity on Tron. And I like that. I really do. So those things are super important. And at least if you choose to gain exposure to this chain and that JST token, or maybe the TRX token, at least if you choose to do that, now you're educated on exactly what it is that you're exposed to. You're exposed to the revenues from these two protocols. And there's $91 billion in stablecoins on TRX, on Tron. So why don't we take a look at some of these?
$27 billion, worth of stablecoin TVL on Tron.
91 billion. Yeah. It's a little bit more than half of all USDT lives on Tron.
All right. Well, they need to update their website. I'm on Just Lend right now, and it's saying that there's only 27 billion. So
that may be in the Just Lend protocol.
Okay.
But on the chain, though, 91 billion.
So as far as never mind. It's just it says total value locked in just DeFi is 11 billion, and then total locked on Tron network it's saying 27 billion. But we can definitely, when I start digging into DeFi Llama and how it compiles its data, we can kind of get to the bottom of that.
Yeah. So if I take a look here at Tron, and then I scroll down stablecoin market cap, I know that it's right around 92 billion in stablecoin market cap. It's like half of all USDT lives on Tron. Yeah. So let's take a look at this. Let's take a look at some of these protocols. So here's the Just Lend DAO. This is what we were just running some deep dive research on. Now I click Launch App, and they've definitely improved the UI UX here significantly, I got to say. It used to be kind of not the best. So let me see if I can turn on one of my wallets to be able to explore this a little bit further. So I've got Tron Link. I don't think I have any assets on Tron Link. I think I set it up though. Did I set it up? I'm pretty sure I set up my Tron Link wallet. Yeah, I did. So let me just go ahead and hard refresh, and let me give that another shot. Let me try connecting this thing. There we go. I haven't created a wallet yet. Okay, so I do have to create a Tron Link wallet to be able to interact natively on this protocol. And I'm going to save that for another day. We're not going to waste any time with me creating a new wallet on Tron right now. But what I do want to do is just run through some of the markets. What is it that I'm looking for when I'm exploring a new protocol like this, right? So this is Sun.io. So the Just Lend DAO brought me to Sun.io, and you can see here. So here's Sun.io. This is where you can swap. This is the DAO itself. So this should be like a money market, right? Let's take a look. SBM version 2, supply to earn. Got it. Okay, USDT. There's very little USDT in this market, only 400K total supply. Very little TRX in this market. So this is the supply and borrow version 2. Oh, you see what's going on here, Mike? So supply and borrow version 1. So this is the version 1, and this is where all the liquidity lives. Okay, I got it now. So what we learned in that deep dive research is that the Just Lend money market version 1 has that pooled liquidity architecture, kind of sort of like Aave v3. That's the flawed pooled liquidity architecture. So, the SBM version 2, this is the safer isolated money market architecture. But it looks like the majority of liquidity lives in version 1, the pooled model, not version 2, the isolated model. You see that?
Mm-hmm.
So that's super important. Okay, well, good to know. Let's hop on back in here to version 1 and take a look at the markets. All right, so what can we do on here? Well, I'm sure that there's some arbitrage plays you can run with staked TRX.
That's what I was just looking at.
Yeah, this actually looks kind of interesting. So if I take a look at STRX, it's telling me that my supply APY is 4.72%. So that means, okay, that's the staking.
That's the base APY plus the staked TRX holding APY. So basically, you're just earning what you would earn if you just simply staked staked your tokens, your TRX tokens.
Yeah, that's what it looks like to me. So let's see here. If you're just holding TRX, then you could supply it here as collateral and earn 0.3%, not much. But if you stake TRX, it looks like you're going to earn that 4.72%. So if you want exposure to TRX, this is what comes to mind for me first.
Now, keep in mind, I just found this really quick. If you stake TRX, the TRX will be available for withdrawal after a 14-day unstaking period. So you need to pay attention to this small print. They're not always really obvious about it. I'm personally, as long as you understand that, I mean, it's your money. I'm personally not a big fan of unstaking periods or cool off periods or anything like that. It's like, if I'm providing you my liquidity, if I want it back, I want it back.
Right.
You just make sure you do your due diligence on, this Just Lend out. Not saying that it's a bad platform, but make sure you do your due diligence on, anytime that you're going to use any sort of DEX or, any, decentralized exchange like this.
So you're absolutely right. Yeah, I'm showing my screen here, staked TRX. Mm-hmm. It says here that TRX will be available after that 14-day unstaking period ends. So that basically means if you want to exit this position, you're stuck for 2 weeks. So what could you do instead?
The same amount of time that that Arnold Schwarzenegger was on Mars.
Well, so if you wanted to be able to access liquidity, let's say that you're holding staked TRX, you want to access liquidity now. Well, it looks like you're going to have to mint USDD. So I'm just clicking through to learn more about this. So this is from March. It says mint USDD with staked TRX and TRX vaults. Awesome. Let's see how we can actually do that.
Really quick, this comment, again, welcome to the channel. It says, with DeFi, I've earned a lot of money, but not as much as the 600K I've lost over the years. Food for thought. Maybe just earn from your skills and save in Bitcoin. Often the KISS, KISS works best. So if you want, it's not a perfect science, but I mean, if you want to learn how to do DeFi right, we have, free. It doesn't cost anything. We have DeFi University. We have a bunch of resources that we don't charge for. David, earns his full-time living off of crypto and using DeFi strategies. So for the past over 5 years, so he's been able to successfully navigate these bear and bull markets and earn a living. He's a digital nomad, living down in Florida right now. Was in California. So some food for thought.
Down by the beach, boy.
Yeah, that's right.
So yeah, taking a look at staked TRX, and just thinking to myself, all right, well, if I supply STRX and I want to borrow stables against it, it looks like I could mint USDD against staked TRX. And now, why in the world would you want to do something like that? Well, because that way you retain exposure to that collateralized asset, the staked TRX. So if number go up, great. But you can also immediately access liquidity. So you could essentially mint or borrow USDD against it. Now, the thing about that is that's leverage, okay? So that comment in the chat about earning a lot of money in DeFi, but also potentially there's a significant risk that you got to be aware of. And if you're going to borrow stable coins against a volatile asset, that is a levered long, okay? So if I supply $100 of staked TRX and I borrow, let's say 50 USDD against it, or mint 50 USDD against it, what that means is I just took on a 2x levered long STRX position. You've got to understand that, because if TRX declines by less than 50%, that position that you got, that levered long, is going to get forced closed on Just Lend. So that's a liquidation. So you've got to be aware of that. If you borrow stables against a volatile asset, that is leverage. So just be aware. But this does look like a legit money market. It really does. So this is Just Lend. Let's see here, supply and borrow. What else can we do on this protocol? Maybe a stablecoin loop, something like that. Let's see if we can do that. So wrapped staked USDT. I wonder, so there's not enough of a spread. So you see, you can earn 4.26% on your collateral, but if you're going to borrow USDT against it, you're going to pay 3.98%. So depending on what the LTVs and the max LTVs are in these markets, you're not going to be able to do anything here. No interest rate ARB on this. And there really isn't an interest rate ARB to speak of on staked TRX, borrowing TRX, because you're earning 4.72%, you're paying 4.55%. So I would stay away from that. But maybe if you just want to hold TRX spot, that could make some good sense, seeing as how it has performed quite well, especially since the start of this last bear market. Has Tron really undergone much of a bear? Because if we measure this, it doesn't look like it to me either. I'm taking a look here. So here's October. This is the end of the bull right there. It's trading at its October levels. So Tron hasn't endured a bear market at all. Amazing. And so if we just go ahead and price this thing in Bitcoin terms, TRX BTC, well, what do you see? Since the start of the Bitcoin bear, there it is, TRX bounced off of its 200-week moving average and trendline support, and then broke out above this relatively recent high in Bitcoin terms, and is pushing higher in Bitcoin terms. So this is the type of thing that we look for. This is just so important to see a token, an altcoin, outperforming Bitcoin. That's what part of what I'm looking for, definitely, when it comes to any alt. It's got to be outperforming Bitcoin. Otherwise, I really can't allocate to it unless I want to speculate, but that's going to be a very, very small percentage of any portfolio, I think. So this is absolutely, I think, an interesting opportunity. So TRX and JST. Now, I'm curious which token has been outperforming the other. I'm going to price JST in Tron terms. I want to see, okay, so recently, JST has been outperforming TRX. So this is a spread. This is a pairs trade. So which one do you want to be allocated to? You want to be allocated to the best and kind of, short the rest. So if I was going to trade this on a spread, I would be long JST, short TRX. Now, if I grab a trend line tool and just drag this down, not only has JST bounced off of its 200-week moving average in Tron terms, but it's put in a technical breakout here too. So this is very positive. Now, the next level that it's got to get back up above is right there. So a push just a little bit higher for JST in Tron terms. And, this is an interesting spread. I like this spread. So this looks like an interesting opportunity. And I see in the chat, appreciate you showing up. Yeah, you're happy you don't have to do any TA, huh? Well, I get it. Staring at charts all day can be a lot sometimes, but I love this stuff. So what do you think, Mike? Taking a look at this JST token.
I mean, it just keeps confirming. Again, tonight, on Crypto and Chill, we're going to be talking about this in depth. The value capture. I mean, we're seeing it repeat. It's like every one of these deep dives that we do that show that a token has solid value capture. It seems like that all of these tokens are the ones that are performing well in this bear market. And compared to Bitcoin. So, they're moving against the market while the rest of the market is, drawing down, 50, 60, 70, 80, 90% or more. A lot of these are up. So, again, I just over and over again, we just keep getting confirmation that this trifecta that we've kind of come up with is valid.
I think it's certainly valid. These are the metrics that we have to be judging all coins, protocols, chains, etc. by. User adoption, user growth. We've got to be taking a look at revenues generated by that protocol. It's a business at the end of the day. And then there needs to be a value accrual mechanism. You have those three items in the trifecta satisfied, and then just make sure that it's outperforming Bitcoin. And if all of those things get a check box, then hey, probably a decent opportunity. And just bringing it back on over here to BTC real quick, Mike, in the last couple of minutes that we've got before we run out of time on this Friday afternoon, this to me, I want to clean this up a little bit so that we can all see a little bit more clearly what I'm talking about here. So here's Bitcoin over the last couple of cycles. Now, Bitcoin likes to put in the same type of patterns over and over again. Bitcoin likes falling wedges. Bitcoin likes inverse head and shoulders patterns. Bitcoin likes bull flags and bear flags. Bitcoin likes falling or rising wedges too. So wedges, flags, head and shoulders patterns, Bitcoin puts these in over and over again. A falling wedge is very bullish. This is a very bullish price action pattern. And we see two of them. They look identical to me. These are very bullish. So I'm just thinking to myself, I'm waiting for capitulation in time and or capitulation in price this bear market for BTC. I think that comes by the beginning of October. That's what the prophecy says anyway. And then after we get that capitulation and the bear market's over, where do we head from there? Well, let's go ahead and project out. Let's see, where could we go from there? I'm going to use that 2017 high as my anchor. And then I'm going to connect to the next higher high. Those are the 2021 highs. And then I'm going to extend this trend line to the right. And notice there's the 2017 high. There's the 2021 high. There's the 2025 high. So we could extrapolate out and say, okay, well, maybe if this pattern continues, where could Bitcoin go during the next bull into 2029? Well, I think somewhere up around 170 or maybe even higher, depending on what the Fed does. Liquidity, liquidity, liquidity. If there's a big print and all of a sudden, it's BTC USD, so it's denominated in dollars. If the denominator becomes less valuable, well, then you might get some type of God candle out of Bitcoin where it's plus $50,000 in a session, plus $100,000 in a session, especially if some of these proposals from nation states, like, of course, the United States of America. And I'm seeing now from France that there's some proposal over there to buy 2% of the Bitcoin supply. If these nations actually start printing their fiat currencies to buy Bitcoin, well, I mean, I'll see it. I'll believe it when I see it. Okay, show me. that's kind of what I think about that. But if something like that happens, of course, it would be uber bullish. And I think that you could actually get into a situation, Mike, where you can't get your hands on spot Bitcoin. I think that could eventually happen because the supply it becomes so tight that if you want to get your hands on it, you're going to have to pay a massive premium, or price might just rip. So that's what I'm thinking about for BTC. And beautiful pattern.
Really, Bitcoin's the only one that I'm somewhat bullish on that doesn't that it actually using our unit of measure, our trifecta, it does terrible.
I know.
Other than the adoption, other than people people buying it. I shouldn't say adoption, but people buying it. Other than that, it does terrible. I mean, I give it a D according to our unit of measure. But again, our trifecta is more for projects that offer goods and services. It's not for a commodity like Bitcoin. You can't. It's like gold. If we used our unit of measure for gold, it would do terrible. So anyway.
Yeah, well, I mean, Bitcoin, I think, is the only true digital commodity. I think it's the only one. And the moment that we've got covenants on Bitcoin, oh man, then you've got basically a smart contract layer that will drive transaction volume on the layer one. You would suddenly, probably see massive growth in the layer twos on Bitcoin also. And then you would have DeFi denominated in Satoshis. Now that is true freedom DeFi right there. Waiting for that though.
Well, and I'll be honest, Bitcoin needs that because I mean we've already seen. I've said it before and I'll keep saying it. We've already seen, huge Bitcoin miners that are securing the network, switching over to AI, to do AI compute because it's more profitable. So, with, more and more of that happening, they need to be incentivized to secure the network. And so the only way that I see it doing that, with halvings and, things in the price of, energy, power going up to, run all these computers. Either the computers need to become more efficient, you use less power to make it, more profitable. They need to incentivize, or they need to incentivize these, these companies or individuals in ways such as, through fees, like some kind of value capture, where the Bitcoin that they're mining and holding, that it somehow generates some sort of return, through some mechanism. And I won't pretend to know what that is, but that's really kind of the options.
I'm just looking forward to true freedom DeFi on Bitcoin layer one. And I think that is in the future. I think that it's going to come. I've got to believe that. At a certain point, you've got to choose to believe. And I really dislike doing that for all altcoins. Yeah. But there's something about Bitcoin, man. I can't quite put my finger on it. It's the prophecy. It's a Bitcoin prophecy. So I choose to believe in BTC, Mike.
Mm-hmm. All right. Well, that's our show. Join us later for the market wrap. Actually, let's take a look real quick. So he did some changing.
Yeah, I kind of got rid of the programming calendar. I can integrate that back in.
Yeah, I was gonna say I freaking really enjoyed that. All right, so let's see what we got the rest of today. So Crypto and Chill tonight at 5 p.m. Pacific, 8 p.m. Eastern, with our guest, Longview Compute. So we'll be talking about what is value capture, and we'll be going over some projects that we feel have it, and take a look kind of apples to apples and kind of show what it is that we're seeing, where the tokens that we've identified so far as having value capture, how they're performing against the overall market, and basically showing that our thesis is valid. What else do we got? We got the market wrap. Also later on today, that is 4 p.m. Eastern, 1 p.m. Pacific. And I believe that's it. Yeah, that's it.
We've got the premium call today at 5.
Oh, yep. We got the premium call today at 5. So if you want to try that out free of charge, you can go to, there we go, the live Q&A. And you can try this out for a week and do 3 of those calls and see if you find value in it. And if you do, it's $97 a month. And that's a live video call with David and the rest of the community, where they talk about advanced DeFi strategies, things that they're doing that work, things that they tried that didn't work, mentorship, that kind of thing. If you're looking to take your crypto and DeFi investing to the next level. We got our Leering Center, where if you're a beginner, intermediate, or advanced, it doesn't matter. It's well structured, tests, quizzes, all of that, where you can go through and learn and and again, no cost. I mean, it doesn't cost anything. So not shilling any programs or anything like that here. We got the source room that David's tweaking up. That's going to allow us to decouple ourselves from Discord and other socials. So we don't have to worry about getting banned from our own freaking channel. We got the Intel library, again, no cost. You can go through all of these deep dives that we've done on all these different projects, and basically give you a head start. Give you a quick jump start in a matter of like 10, 15 minutes. You can at least have a general idea if it's something that you want to take your time. Time is the only finite resource that that we have. You can make money, you can't make more time. So make sure that you take advantage of these. Again, no charge to you. It's something that we just do because we're passionate about this and want to help you all out. And then one of the few things that we do charge for, other than those live calls, is the coaching. So if you want to do a one-on-one, highly bespoke one-on-one coaching with David, you can schedule a no-cost exploratory call. 30-minute exploratory call with David, where he'll go over, looks like it doesn't say free here, but I know it is. And he'll go over your portfolio, what your risk profile is and what it is that you're looking to accomplish, where you are as far as knowledge. And if you are at the point to where he feels like that, it would be beneficial for you and you feel the same way, then, you can, purchase that. If you or he doesn't feel like that you're ready yet, then, maybe he'll give you some homework and say, hey, go into the DeFi University, go through these modules, kind of get, tuned up in these areas, and then come back and see me. Because we want to make sure that you benefit from, what we offer here, what we charge for. And that's one of the reasons why we give away so much value for free, is if we have highly valuable, resources that, the Intel library and the DeFi University, that we're just giving away. Imagine what we charge for. So anyway, appreciate you all. Hope to see you later tonight. And until next time, Veteran Crypto out.
Peace.